Every year, investors all around the world track what their central banks do with interest rates. Depending on what the monetary policy team is trying to achieve, either trying to tame inflation or boost economic growth or both. Some cases, the monetary policy committee might have to, sacrifice economic growth by tightening interest rates to lower inflation. And right here in Nigeria, we have 12 members that vote on either to hold, hike, or cut interest rates. This committee is made up of central bank governor, deputy governors of the Central Bank of Nigeria, and external members to provide independent, non-CBN perspective there. So these are the faces here when you hear the central bank there, the central bank governor actually giving us, the decision from the meeting. He's not the only one making that decision. But let's do a throwback to the first MPC meeting of 2025. That was in February. Members retained all parameters, and it was a unanimous decision there. Leaving the monetary policy rate at 27.50%, the asymmetric corridor plus 500 negative 100 basis points. We had the CRR for deposit money banks 50%, the ones for merchant banks 16%, and liquidity ratio at 30%. That was the first one. Now let's look at how inflation and interest rates move, in 2025. We see the red there represents inflation rate year-on-year. Then the blue line, that's for the MPR, that's interest rates. And we see that's been quite stable most of 2025. Then we had the rebasing right here for inflation, and January was around 25% there. But we've seen inflation trend downward, since then, gone up to about 14% in November this year. Then right here, we had the first cut after a long time, 50 basis points there, cut by the MPR rate there, and that decision was also quite unanimous. So we've seen that the way the trajectory for the monetary policy is stable, but inflation, regardless, that has been moving downward since the rebasing there. And we saw the National Bureau of Statistics, they rebased Nigeria's inflation data, updating the way consumer prices are measured, to reflect current spending patterns and market realities. So, definitely that's the trajectory right there between inflation rates and the MPR. The question is, has the CBN MPC done enough?
Kudos to the CBN Governor Cardoso and his team, really. For me, I can't believe that in 2 years we have a very stable macro policy, and the situation has enabled businesses to be able to predict a lot better. And the stability of 2025, I'll say, has given a bit more confidence to the market.
The MPC has done a fantastic job, in my view, in terms of holding the rates firm. Notwithstanding, going into next year, I still see a hawkish position, at least for the first quarter. Why? Because at least that gives us a 1 year period now to now compare the same basket of goods and services to align with consumer expectations, investor expectations, and so on.
In 2025, monetary policy decisions had a direct impact on lending rates, investment flows, and market confidence. Banks adjusted their lending strategies, while investors closely monitored MPC signals to anticipate shifts in interest rates and currency valuations.
We had a tough start to the year. When we started, the Nigerian currency was not very stable, and fuel supply was also not quite stable in the environment. We had a lot of macroeconomic issues in the beginning of the year. Interest rates were very high. When we started the year, inflation was around 33%. So it was a very difficult start to the financial year. But as the year went by, and with the policies that we had from MPC, as well as the fiscal side of the economy was able to show signs of strength. Well, in terms of interest rates, we've seen some kind of tapering from the MPC, dropping from 27.5% when we started the year. I believe that very soon interest rates will begin to taper down. And of course, we've also seen some credit flow into the economy towards the second half of the year.
Inflation remained a key focus throughout the year. The CBN's measures, including targeted interventions in foreign exchange markets and adjustments to reserve requirements, aim to stabilize the naira and curb price volatility. In 2025, Nigeria's foreign reserves saw a steady rise, kicking off the year at about $39 billion. For the external buffer, 2025 was characterized by decline due to debt servicing in Q1, then in Q3, a sharp recovery due to continued accretion from improved oil receipts and inflows. The growth of a country's external buffer has a direct relationship with the local currency, as the foreign exchange reserves are the ammunition a central bank uses to defend its currency. The Naira began 2025 as a currency in crisis, but wrapping up the year as one of the better performing emerging market currencies. From an opening rate near 1,550 Naira to the dollar in January, ending the year around 1,455 Naira to the dollar, representing a year-to-date appreciation of about 6% over the 12-month period.
We've seen currency stability, because currency stability is very important in an economy. You look at economies in the GCC where their currencies have been stable for the last 20, 30 years. And in Nigeria, we've not had that same kind of stability in place. But now, with the policies that we've had from the central bank, Naira is quite predictable. Naira is hovering around 1,450. So it's very predictable, and the economy is beginning to stabilize. We also have some predictability in terms of fuel supply, the retail end of the market, even though there are still some disruptions here and there, but there is a lot of stability in the economy going into 2026, and we are quite optimistic about what is actually happening in the economy.
The committee decided to maintain the current monetary policy stance.
When the Monetary Policy Committee makes a decision, another segment that reacts is the fixed income market. Short-term yields adjust almost immediately. If the MPR rises, new T-bills tend to offer higher yields to attract investors. If the MPR falls, yields usually decline. For government bonds, long-dated bonds react more slowly, but prices move inversely to yields. A rate hike generally lowers bond prices, while a rate cut boosts prices. And traders go straight into action, navigating investor appetite. I had a sit-down with Mr. Chukwu Nwachukwu, Chief Dealer and Group Head of Trading at United Bank for Africa.
The market itself, kind of like sense, what will happen. That's why the same market has actually priced some certain decision in. Usually we see the reaction, based on information in the markets, some of the parameters that affect will affect MPC decision, such as inflation, figures, such as some of government fiscal policies, right? So if, for example, inflation prints lower than is expected, and then you expect that the MPC will react to it for a very long time, unlike the established markets, for example, Federal Reserve the committee, they usually give what is called further guidance. So that in the next 2, 3, 4 Fed meetings, this is what you expect. But our market hasn't grown to that level. But again, I must give credit to the current CBN governor from his stance, which is from the one he said, look, price stability is his watchword, right? So from all his actions, you could see that he's been able to maintain that. And so for us in the market, knowing what the CBN stand is, and then getting all this data like inflation, you could literally tell what decision the central bank is going to make.
As 2025 ends, Nigeria's monetary policy is focused on stability, measured growth, and market confidence. With careful navigation and strategic interventions, the Central Bank of Nigeria aims to lay a solid foundation for economic resilience in the year ahead.